Welcome to the Dick Dive, where we cut through the noise to get you well informed fast. Today, we're plunging into the latest financial health and strategic direction of Pinterest Inc. That's PINS on the NYSE. We've been digging through their recently announced second quarter 2025 results. They just came out August 7th, and also their detailed Form 10Q filing. Our mission today: to uncover the most important numbers, understand the company's, evolving strategy, and really explore the underlying trends and future challenges for this visual discovery platform. Now, Pinterest CEO Bill Ready made some pretty bold claims recently. He called their current state the best product market fit ever, while at the same time they hit record users and strong revenue growth. He sees Pinterest as both a personalized shopping destination and an AI-powered advertising platform. So the question is, can a company really be both things effectively? Inspirational discovery and, well, aggressive commercialization. We're going to unpack those claims and see what the data actually tells us. Okay, so let's kick things off with the headline numbers for Q2 2025. Pinterest reported revenue of $998 million. That's a really strong 17% increase year over year, both reported and in constant currency. And they hit an all-time high of 578 million global monthly active users, MAUs, which is up 11%. On the surface, those look like solid wins.
Oh, they absolutely do. And what's particularly compelling here isn't just, the growth on two fronts, more users and more revenue per user. It's the significant jump in profitability that really stands out. Their GAAP net income soared by a remarkable 336% to $39 million. And adjusted EBITDA, that grew 33% to $251 million. So when you combine that strong top-line growth with such significant margin expansion, it suggests their business model is not just maturing, but becoming, well, far more efficient at scale. It really points to a company that's found a kind of sweet spot between growth and operational effectiveness.
It sounds like Bill Ready's confidence isn't just talk then. He's never been more confident in delivering for both users and advertisers, really leaning into that best product market fit ever claim. And he specifically mentioned those two strategic pillars: a personalized shopping destination for users and an AI-powered performance platform for advertisers. But what specifically, what are the new features or shifts in user behavior that actually underpin such a bold statement about their product market fit?
That's a great question, and it gets to the deeper currents beneath these numbers. A critical detail here is the demographic shift. Gen Z. They now make up over half of their user base.
Over half. Wow.
Yeah. And this isn't just a fun fact. It fundamentally changes the dynamics, Gen Z are digital natives. They're often looking for visual inspiration that quickly translates into action, maybe a purchase. So when Reddy talks about a personalized shopping destination, he's clearly leaning into that. And AI becomes the engine to serve up exactly what those users might want, sometimes before they even know they want it. For advertisers, well, AI means ads aren't just seen, but are highly effective, tailored, driving real performance. It's a strategic double down on their, let's say, unique visual identity.
That makes a lot of sense, especially with Gen Z driving things. But let's dig into that user growth a bit more. 578 million global MAUs. Okay, that tells us the scale. But where exactly is this growth coming from? Is it pretty consistent across regions, or are some areas really pulling the weight?
Right, looking at the regional breakdown gives us some crucial context. While global MAUs grew 11% overall, the fastest growth actually came from the rest of world region. That increased by 14% to 329 million users.
Okay.
Europe saw a respectable 7% growth, up to 146 million. And the US and Canada saw a 5% increase, bringing them to 102 million. What's fascinating here, though, is that Pinterest attributes this growth primarily to ongoing investments in relevance and personalization.
So it's the AI working.
It seems like it.
Yeah.
It suggests this isn't just about, throwing more content out there. It's about making sure that content is exactly what users are looking for, what they might want to discover. It really highlights how important tailored experiences are becoming, particularly powered by AI, for attracting and retaining users globally, especially perhaps in those emerging markets where user habits might still be forming.
So growing users is clearly a strong suit, particularly internationally. But the real test, always, for a platform like this is how effectively they're converting all that engagement into actual revenue. That's where average revenue per user, ARPU, becomes critical. The global ARPU increased by a solid 6% to $1.74. That sounds okay, but...
Well, if we zoom out and look at the regional ARPU figures, they tell a really interesting story. The US and Canada ARPU is significantly higher, $7.29.
Right.
Compare that to Europe at $1.30, and the rest of the world at just 19 cents.
19 cents. It's a huge difference.
It's a staggering difference, yeah. And it reflects the maturity of the digital advertising markets, primarily. But here's where it gets nuanced. The rest of world ARPU, that 19 cents, it actually grew the fastest, up 44% year over year.
44%. Okay.
While Europe's ARPU increased by 26%, and US and Canada by 6%. So this indicates that while the absolute revenue per user is much lower in emerging markets, the growth rate there is incredibly high. It suggests Pinterest is rapidly refining its monetization strategies for those regions. And that gap, well, it has significant potential to narrow over time as those markets mature. Remember, their revenue comes from various ad models, CPC, CPM, CPD, CPV for video. For an AI-powered performance platform, the shift is often towards performance metrics, like cost per click, CPC. That means advertisers pay when users actually do something like click through to a shopping site.
Which is exactly what advertisers want, right? Performance.
Exactly. That's becoming increasingly critical for their appeal to businesses focused on direct conversions.
Okay, so the top line numbers are solid, users are growing, monetization is improving, especially in those growth markets. But beneath all that, what's the financial engine really look like? Are they building up a war chest? How are they deploying capital?
Their financial foundation appears very robust, actually. Net cash from operating activities increased by 95% to $208 million. Free cash flow, up 94% to $197 million.
Wow, almost doubled.
Yeah, really strong cash generation. And that contributes to a very healthy balance sheet. They're sitting on $2.66 billion in cash, cash equivalents, and marketable securities.
It's a lot of flexibility.
It signals not just stability, but a significant capacity for strategic capital allocation. For instance, look at their long-term commitment to Amazon Web Services, AWS. It totals $3.25 billion through April 2029.
3.205 billion.
Billion, yes.
Yeah.
With about $766 million remaining as of the end of the quarter. This is a massive investment in their core infrastructure. It powers their AI, their personalization efforts. They also have an active stock repurchase program, $1.67 billion remaining out of a $2 billion authorization.
Okay.
So these aren't just random expenditures. They demonstrate a company with strong liquidity, confidently investing in its tech backbone and returning value to shareholders. It suggests, real long-term strategic confidence.
Okay. It's easy to focus on the good news, but no high-growth tech company operates in a vacuum. Given Pinterest's ambitious strategy being both inspirational and a shopping destination, what are the most significant obstacles or maybe trade-offs you see them grappling with right now?
That's precisely where the real depth lies. Pinterest's heavy dependence on advertising revenue means they must continually attract and retain advertisers. And that space is intensely competitive.
Always is.
Always. So their ability to deliver relevant content and scale monetization, particularly internationally, is absolutely crucial. And this raises a fundamental challenge. How do you balance increasing the ad load, which drives revenue, with maintaining a high-quality, inspiring user experience? You don't want it to feel intrusive.
Tricky balance.
And another significant area is both a challenge and a massive opportunity is the continued development and, importantly, the ethical use of AI. Sure, AI is vital for personalized content and ad targeting. We've established that. But it also brings risks. Reputational harm if recommendations go wrong, potential liability for inaccurate or harmful content surfaced by AI, and, of course, evolving regulatory scrutiny, like the EU AI Act.
Right. The regulatory landscape is always shifting.
Exactly. And this isn't just a hurdle. It's about building and maintaining trust with users and advertisers when AI is so deeply integrated into the experience. Furthermore, data privacy regulations, think GDPR, CCPA, they're a constant factor. They potentially limit the ability to collect and use data for that highly targeted advertising, which in turn can make it harder to measure ad effectiveness. And finally, don't forget the reliance on third-party platforms, app stores, search engines, AWS itself. Policy changes or service disruptions there can introduce significant risks. Plus, the constant threat of ad blocking tech means they have to continuously innovate how they deliver ads without being blocked. Looking ahead for Q3 2025, they expect revenue between $1,033 million and $353 million. That's about 15% to 17% growth. And adjusted EBITDA between $282 million and $302 million.
So still strong growth, but maybe a slight deceleration from Q2's 17%.
Slightly, yeah. The guidance suggests continued but perhaps slightly moderated growth expectations.
Okay, so we've taken a deep dive into Pinterest's Q2 2025 results. It paints a picture of a company that's, well, successfully growing its user base, especially with that key Gen Z demographic, and significantly improving profitability. Their strategic focus on becoming a personalized shopping destination powered by AI seems crystal clear. as does their deliberate approach to financial management, substantial cash reserves, active stock repurchases. However, like any platform operating at that intersection of social, search, and commerce, they face ongoing challenges: data privacy, content moderation, intense competition, and the rapid evolution of AI technology itself. So, what does this all mean for you as a user or just an observer of the digital landscape? Maybe consider how a platform like Pinterest, really built on visual inspiration, can keep growing its monetization without compromising that core user experience, especially as AI gets woven more deeply into everything it does. And what does the increasing importance of Gen Z users really mean for the future of digital content and commerce platforms? Will visual discovery continue to dominate, or will new forms of interaction emerge? Something to reflect on how these dynamics might shape your own digital experiences in the years ahead.